some lively debates around whether or not Africa can really survive the broader impacts of structural changes in the global economy. But what most African investors are concerned about is the infrastructure issue in Africa and whether or not there's sufficient investment in infrastructure to try to improve on business processes. As you said, I am joined by Farooq Oreagba from the Nigerian Stock Exchange, and this is one of your big issues, is not enough people are talking about financing infrastructure, using local bourses to finance bonds for infrastructure, and that's really the critical issue here.
Absolutely. As the recent economic situation has meant that a lot of the African economies are facing a funding gap, because basically most of the economies are export-orientated. Now, infrastructure, it's been estimated that lack of infrastructure has added about 30 to 40% to the cost of doing business. And ultimately, this is passed on to the end user. One of the main ways of funding infrastructure is by issuing bonds on the bourses. Also, you have PPP, but as an exchange, the main thing we're trying to do is, address those funding issues, primarily by letting governments and institutions know what it takes to issue bonds, to know that they can issue bonds, and these can be used to finance infrastructure. And in some cases, we're also trying to let them know if the bonds don't work, or if that's not the preferred route, we don't just turn away. We also let them know about the PPP, even though that doesn't directly impact on the exchange. Right. But we let them know about the PPP.
So we'll talk about that in a second. Many international investors will say, we like coming into government bonds, even though they're low yields, because at least you can guarantee that a government will service its debt. The only disconcerting issue is that the bonds are usually dollar denominated because currencies are weak here. And, you're buying out the debt of an African country, many of which are heavily indebted to the tune of something like 40% of GDP.
What we've tried to do, I do appreciate a lot of the a lot of the bonds that have been issued were foreign currency denominated, and that puts a strain on the finances of the country, because just look at recent times, the volatility of some of the exchange rates has been phenomenal. We in Nigeria, for example, and I know one or two other bourses are doing it, we're actually issuing local currency denominated bonds. These do have their risks, because they're not necessarily as attractive to international investors, because they have to weigh out the currency, the currency risk. Also, other things like, the policy of the government, is the exchange rate is it going to fluctuate? Right. In some cases, you have exchange rate restrictions. We in Nigeria, for example, we have no restrictions on foreign currency flows. But yes, it is a problem. But what we need to do is, if the business processes are put in place, the rule of law is in place, investors will go where they think they're going to get the right returns. If they can quantify those risks, they'll make an informed decision, and you will find out that bit by bit, they're quite willing to invest in local currency bonds. We're finding that. We have a lot of bonds, local naira denominated bonds, and some of the biggest investors of those are foreign institutions.
Let's talk about innovations, because you keep on insisting on the need for a public-private partnership. The private sector is interested in financing infrastructure. If you look at the subscription of an infrastructure bond, for instance, in Kenya, oversubscribed. Yeah. So people are interested. There is a sense that the government, though, doesn't fulfill its part of the bargain.
You put me on the spot. The private investors will go where they feel they can get the best returns. The problem with public-private partnerships is no private investor is going to invest in a concession or anything like that if he feels that a couple of years down the line there's a change of government and they're going to rip up the piece of paper. So the role that governments have to play is to make sure the environment is right. That includes corporate governance, transparency, efficient business processes and things like that. The rule of law, adherence to contracts. If those can be put in place, these investors will come. The bottom line is, the investor, the guy on the street, wants to know that he's got his roads, he's got his electricity, he doesn't care where it comes from. If the role of the government is to make sure that this environment is there. If the environment is there, the investors will come. They're looking for returns.
Nigeria, what's the environment like? Just by way of regulatory issues, we had a situation where when the naira depreciated by 20%, the former governor of the central bank was intent on protecting and defending the currency. Investors don't want to hear about things like that.
I know, we've had that. I was with the new CBN governor yesterday, and if you look at what's happened in recent times, the parallel market for the naira against the dollar has sort of come back in line. The gap is closing. This is all about policies. If, you know, okay, the price of oil has gone up, but bottom line, it's about the policies. I think the policy of the present government, as of now, is to allow naira to find its own value. There's no point in trying to defend the naira at all costs, because at the end of the day, it's an artificial level and it's bad for business. I think the environment there, we're not perfect. We have a lot to do in terms of making our business processes better. Even at the exchange, we're working on things like that. We're looking at corporate governance. We're looking at, you know, adherence to contracts and, you know, transparency. So it's work in progress, but at least we're working towards the right result, I feel.